In our second video lecture for our topic on the income statement and statement of cash flows, we're going to be taking a look at the next step in our multi-step income statement. We discussed how gross profit was presented, the elements that make up gross profit, and now we're going to be looking at two distinct items that make up our second step, which is the calculation of two subtotals, operating income and income from continuing operations. Again, these are two key numbers that financial analysts or users will use to make predictions based on the historical data we're presenting. So next, after our gross profit, we're going to present to our users the operating expenses. These are expenses that cannot be tied directly to sales, so they don't match directly to a unit that was sold. Instead, these are period and allocated expenses that relate to our operations, the things we do on a day-to-day basis. So we have things like general and administrative, that is the cost of running our accounting department, our personnel department, and we have other operating expenses. Let's take a quick look at that. This is our section that we're looking at, and as we said, general administrative personnel. Let's take a close look at this item because this sometimes causes some confusion. Selling costs. Well, the first thing to understand about selling costs are that they occur after the point of sale. So these are all costs that are associated from the time that the customer accepts the offer through any further action that is taken on the sale. So we have things like sales commissions, coupons, rebates, other incentives that we give to the customer. If we pay for shipping, well, it's possible that if it is free on board to destination of the customer, then the seller pays, and that becomes a selling expense. Next, let's look at research and development, R&D. For many, many businesses, this is a key amount. But research and development, according to US GAAP, cannot be capitalized. Instead, it is expensed as it occurs. So if we have research on a product that we expect to take to the market in 2 years, and we incur $50,000 worth of expenses this year, we have to report it this year. Now, some say this does not provide a good match against our revenue, but GAAP says because it is so hard to make a connection between current research and specific future sales, it is more conservative to expense them as they are incurred as opposed to capitalizing. We will see later in Intermediate 2 that the application of GAAP rules involving lowest cost or market can lead to a loss from the write-down of obsolete inventory. Now, this can be presented two ways. This can be presented here as part of our operating expenses, but the more common way that this is reported is as part of cost of goods sold. Typically, it is broken out of cost of goods sold when it is a material amount and it relates to inventory items uh, that the write-down would be infrequent. Next, we have restructuring costs. Restructuring costs are those costs that relate to a change in the operations. This means that we are going to continue in a line of business, say a product, but we're going to alter the process. And in altering that process, we may consolidate our operations from 2 factories to 1. We may change out equipment. We may have to uh, lay off workers that would incur severance pay or early retirement costs. All of these are presented as part of operating expenses. These are not considered to be outside of the normal business risk in a going concern. And the last item in our uh, operating expenses relate to the impairment of assets, and these relate to those operating assets or intangible assets, most notably goodwill, where we do not believe that we will recover the book value of the asset. And we're going to be looking at this in both Intermediate 2 and in Advanced Accounting. So these items that are included in operating expenses will be combined and will give us another key subtotal that we're going to report to our users, and that is operating income. Now, in this presentation notice, there are probably a couple expenses that you expect to see. For example, depreciation. Well, depreciation is going to be included for, say, office equipment in our general and administrative. Depreciation relating to sales assets, such as, say, salesmen's cars, will be included in selling costs. Other depreciation costs will be part of the manufacturing overhead that will be included in the cost of goods sold. And other types of accounts that we've been working on in our earlier coursework and in Chapter 2, all of those accounts that are part of the chart of accounts are not going to be listed individually. Instead, they're going to be grouped into categories of elements that will fit into the ones presented here. U.S. GAAP does not have specific requirements, but generally speaking, you will always see a line item for general, administrative, and selling costs, and then any other unusual but not frequent uh, items, such as these restructuring costs, impairment, loss from the write-down of obsolete. Research and development costs are often included in general administrative, but for certain key industries, pharmaceuticals, chemical companies, aerospace, any industry that makes a big investment and whose future is tied to research and development, for example, technology companies like Apple, uh, they will separate research and development out for their users. In our next video, we're going to take a look at the items that constitute other income and expenses.